Welcome to No FOMO Charts, live stream number 9. Today is Saturday, September 5th, 2020. In this channel and this video, I talk about stock charts and technical analysis education, as well as crypto charts. Disclaimer, these videos and charts are for educational purposes only. This is not financial advice. So let's start with the usual, the Dow Jones Index, DJI. So I know a lot of action happened in the stock and crypto market this week. Before we get into some individual stocks like Apple and Tesla, we'll get a global, more broad perspective of the stock market first as a whole. So I'll try to make this stream shorter today because it is a US holiday, so we'll see. Okay, so right here, 2020, DJI, let's go, DJI. Dow Jones Index. All right, so what happened was we had a large bear break, okay? Bear break meaning red days, down days, due to some, I'm not going to really say overvalued, it's kind of overextended tech stocks. So what happened was we hit our support targets. Okay, you see these two yellow circles? We marked this last week's video. I said if we break down bearish, we're going down to this area exactly where we hit our targets. Okay, so it is a little bit challenging to try to, we can't really predict exactly when a crash or a pullback like this is going to happen on the Dow Jones. It was a almost 5% range total. I mean, if you go from top wick to bottom wick, it's 5%, but the close ended up closing around negative 3% just in the past 2 days. All right, but I think what the charts are telling me is if we learn how to interpret charts is we're still in the uptrend. We're still in the uptrend. It's just a very strong pullback, just like in June. You remember this? You're in the market here, just 1, 2, 3 days back in June, and we had an even larger pullback. We had a negative 9% pullback over here. Okay, so you could kind of feel it on the charts when things get a little overextended. People are going to take their profits like this. You see this? Just visually, you can see a little overextended, a little bit when it starts looking like a rocket ship and it starts mooning. You know what I mean? Rocket ship goes up. The steeper the angle, the steeper the fall. Like this. So like penny stocks, this happens a lot. It's just huge, like 100, 200%, and then huge like this. Right? So visually, you could see it right here. You could sort of see it here, right? But this is more of on a day chart. I mean, if we go intraday, you could definitely see. But if we stay on a 1-day chart, you could just kind of, this is one of those stock plays where we just felt it in the market this week. We felt it in the market. Traders and investors, we felt it, that a pullback was coming. Pullback meaning red days down. You can see it on the charts. There are other tools, but I'm trying to keep it simple. All right, so why did Dow Jones stop here? A lot of people are asking like, why? Why is this happening? What is happening? Why now? So on technical chart perspective, if we look here, there is this large gap resistance. See this hole right here? There's a hole in the price. So when we have a gap, that becomes a resistance level and it stays there. See that? Now that just this one picture of this yellow box makes it more clear on the charts. There's also another one here as the Dow Jones all-time high range right there. So what happened is the price hit this range. And in my opinion, traders, investors, bots, algorithms, professionals, they all said, and then retail traders, retail investors, everyone's trying to pile in at this this past week. And then professionals are going to say, you know what, time to short, time to sell, and then boom, take their profit, initiate, execute, basically obliterate people's stop losses, right? And they push the price way down. But what's happening right now? So the stock market and bond market is closed this US Monday, Labor Day. It's a holiday. The government has a holiday. Stock market, bond market also has a holiday. So if we just look at what happened in these past 3 days, like let's look at the last week. Let's see, what's the start of the week? Look at my calendar. Basically August 30, September 1st. Okay, so right here. 1, 2, 3, 4, 5. It's these days, right? Boom, that last big push, then short. But what we have here is we're finding support with this last candle. This is called the hammer candle. Meaning instead of being a giant red bar like that, buyers, basically bots and algorithms are buying this. Day traders, they're buying this, right? Bots and algorithms. There's a support level. So where is the support? Right here, 27,665 for Dow Jones, right there. That also corresponds here to support 1, 2, its previous resistance, 3 touch points, 4, maybe 5 right here, right? Because of this reaction back in the COVID-19 crash. Basically, at least 4 touch points. So that's support number 1. Where's support number 2? Probably somewhere in the bottom right here, 27,311. Right here. Support number 3, because of this, you see this right here, right there. There's one, another support. Let's keep doing supports just in case we have some really, really bearish reaction, right? Look at all these supports just right here. These are all the levels that the Dow can fall to, right? So what we don't want to get panicked about though is it's not a bear market. It didn't turn into a bear market, okay? It's just negative 5%. What clarifies what's the requirement for a bear market? It's negative 25%, negative 25% from the recent high. So the COVID-19 crash, that was definitely bear market. That was negative 40% range almost, right? So when we have this negative 5-6%, it's not over yet. Because we have these pullbacks in the Dow Jones, like back here, beginning of June, we had a negative 6%. Or beginning of May, negative 6%. Beginning of June, negative like 9%. So now we have beginning of September, negative 5%. And so yes, if you look at the news, if you look at the research historically, September is a month to pull back, meaning the market pulls back historically based upon research. So me as an analyst, myself, was cautiously watching the past like week or two because, you know, this is a very, very special year. This never happened before basically. So I wanted to see what the reaction is going to be, but still the charts worked out. Okay. So we just want to remember though, we're still in an uptrend. How do we know if we're in an uptrend? On a 1-day chart on the Dow Jones Industrial Index is series of higher high and higher low prices making basically upstairs pattern. So this is higher high, higher low, high, low, higher high, higher low. This is a lower high that was getting sketchy back in July, but still a higher low. Then finally a higher high, a minor break, then a higher low, higher high. So the question is, the pattern is, well, if it pulled back, then it's going down. Then the question is, will the higher low be established somewhere where I'm circling? So we're starting to see the start of that. I'm drawing these extra horizontal white support price lines just in case this thing starts crashing really hard, which it's possible. If there's enough fear in the market, we could crash hard. But for now, okay, this is a Friday. I'm looking at basically 1-day-old data today. This is yesterday's data. So we have to see actually what the reaction is on Monday. What's Asia's reaction going to be? I mean, Asia right now, I mean, like Japan, South Korea, and maybe even parts of Southeast Asia, you know, getting hit by 2 typhoons in a row, like 4 typhoons in a row. Basically, in the past month, they got COVID lockdowns happening. Like I heard in South Korea, there's COVID lockdowns happening. They extended for another week, basically. So it's going to be an interesting week, this upcoming week for global markets and the stock market. So overall is we just want to watch this. We want to watch this because if we're going to get some COVID-19 crash panic, all right, that would be bad if it keeps doing this, right? But if it's one big down, but eventually it recovers and breaks through this resistance on the Dow Jones, then we're still in the uptrend. We would still be in the uptrend like this. You see this? When you draw this, it makes a lot of sense. So if we lose this trend line and this support right here around the 27,000, 28,000 range, if this starts downtrending like this, that would be kind of bad in the medium term, right? Also want to watch out for potential bearish setups like a head and shoulders. Might get a bounce, but if it fails, then we're going to see some downside. Possibly. But again, this is the US market. US and the bulls, they don't like to give up so much so quickly. We need something extreme happening, right? Extreme sell-off or extreme global government problem. Because this is COVID, that's why this happened. But this is just a technical sell-off. Also, tech is overextended. So let's move on to SPY. S&P 500. Okay, S&P 500, remember, it's the top 500 selected stocks to get into this index. So basically, they're good companies. All right, so it also hit our bearish support target. I'm going to erase this S&P 500 one-day chart. So now what we're seeing is, again, the pullback. The pullback to where? The pullback to the gap. Support. See this? Generally range. Didn't quite hit it, but this is support still right here. All in this price range. All in the 3,300 range. So the previous top before the COVID-19 now becomes the support. As long as we hold this, S&P 500 is technically fine on the charts. Again, big pullback, but you could see a little bit overextended. Let me zoom in. It's kind of hard to see on the screen. When you zoom in on one-day chart, it's all of a sudden we're getting some overextension, right? When it starts angling up sharply, why does this happen? Well, people take their profit. They sell. They take their profit. They sell. Shorts activate the short sellers, okay, meaning the red, it's the opposition to the green side. The buyer side, it's the sell side. They'll sell. They'll force the price down. They'll force people to sell. Activate stop losses, and then the robots and the algorithms will stop their selling action. Okay, they need a buyback to close their position, and then day traders will jump on this, swing traders will jump on this, bots, right? So it's exaggerated by bots and algorithms, but the psychology is there. Once prices get a little too high, people up in the money are going to say if they bought down here, here, or here, they're going to say, let me take some profit, and then the whole, what I call a stock market trading cascade happens. All right, but we're still in the uptrend for the S&P 500, still in the uptrend. All right, if we zoom out to way broad perspective on a 1 month chart where each candle is 1 month, it's like, okay, yeah, we've been overextended for 1, 2, 3, 4, 5, 6 months. Taking some profit. Weekly, right? Like I was saying in several videos ago, there's a possible five-wave Elliott wave pattern, okay? Generally here or here, like this, probably like this, right? More like that. Where if this comes to fruition, like maybe there will be an ABC correction pullback. Maybe. This is a weekly chart though. We're talking about several months, right? And we got elections coming up in November, first 1 week of November for USA. So the timing of this is very interesting. Very interesting how this is playing out with society right now, US society. So bullish and bearish targets. Okay, and this applies to Dow Jones too. So I'll just do it on the S&P 500. Make this video shorter. So immediate support right here, the bottom of this candle. You see this, right? People bought it on Friday, right? It didn't close down. It wasn't horrible red day. So support at 3350, rounding. All right. There's also this whole big giant yellow box gap support. So the second support, I'd say at top of the gap, 331A, bottom of the gap, next support, 3258. Okay, this is pretty close enough to these other, you see these ranges, they're all connecting. This is connecting, this is connecting, right? It's just business as usual for stock traders and investors, right? You get a big run up like this again. End of May, beginning of June, you're going to get a big pullback. finding support. So what matters is where's the support? Where's the floor in the market right now? The market is looking for that. Where is the floor? Where is the floor? We found a temporary bottom, 3350 on the S&P. Question is this going to hold, and are we going to continue the uptrend of higher high, higher low? High, low, high. Is this the higher low? If it's true, somewhere here we need to find the bottom and then make this higher high and break out to higher highs, right? It's just visually, traders know it's like when we break higher highs and we get this overextended rally, sell off, but now the direction is still in the uptrend by definition. How would it turn into a downtrend? We need to see it do this, bounce up to make a lower high, lower price high up here, and then subsequently break down to lower lows and lower highs like that. You start going downstairs. Then that would be bad for the S&P 500 as a whole, as an investor, right? Because you look at COVID, that's exactly what happened, except it's extreme. Usually it doesn't happen this fast, but anything's possible, right? You're like right here, but back out to 1 year ago, September 2019. It's like higher high, higher low, higher high, higher low, higher high price, higher low price, higher high, and then immediate crash, but finding support, then a lower high, and then right here is the extreme game over for investors, where people are saying, okay, they believe it, and then you get the fear, panic crash, and then, but the government saved us, right? And then we turn into this recovery rally. The only problem is, yes, we're at all-time highs and blue sky breakout, meaning it's floating up here in the sky. This used to be the highest price ever in the S&P 500. Now this was the highest price ever. So 3,600, our resistance. And now immediate support probably like 3,393, somewhere in there, the previous top here. So we just want to see is eventually, are we going to get support, price support here and just basically find the bottom here and bounce up, or are we not done yet? So next week is actually very important for the stock market. Okay, so we're still in the uptrend though, right? We can confirm this by a trend line and see this right there. The hammer, this candle pierced this yellow trend line and bounced back up. So this is the temporary support. The 1 day temporary support, right? This could be a signal, but also it's a different gear, right? Because of COVID, and I'm trying to be a little bit more cautious because of COVID. Next, the big one, Nasdaq. I mean, all four of these are going to look very similar, so I'll speed this one up. But this is the tech sector index, Nasdaq Composite. Okay, so we hit both of our targets. This thing's moving around a little bit. We hit both of our targets, right? The first one, boom, right here, and the second one here. How do I know? Because there is a previous price level over here. So it hit all this range down to my second support level, right? Where I was basically saying this is the bottom support down here, support here and here, here, and it works. But the problem is this one, the little short-term downtrend, the trend line right here was violated, but it's just short-term, right? So that's short-term. But if we zoom back out, Nasdaq's still in an uptrend, but see, look how much just visually Nasdaq is overextended above the previous high. This used to be the previous all-time high. It was broken in June, and we have a breakout, and then we get a big FOMO rally. Just overextended. Okay, it's not really FOMO, but it's overextended. There was some FOMO this week, right? So let's look at immediate support and resistance, like what's happening now. Okay, so the bottom of here, the bottom of this wick, candle wick. Okay, this is a hammer. That's a good sign, right? 10,867. Okay, next support 10,299. Probably the bigger third support 9,827. I'm doing much bigger supports, right? There's immediate support up here at 11,000, and so the resistance up top 11,534, and then 12,000. So again, it's just up to trend. How far can this Nasdaq bull trend survive? See this? You draw a larger trend line. I mean, you can even probably draw one down here, right? That one works too, but I want more touch points on this trend line to make it very strong. Right here. See that? Closed right above the trend line. What does that mean? Bulls are trying to keep the market alive. Nobody really wants a stock crash. Nobody really wants another one. But if it happens, right, we could pull back all the way down here. It could be really bad, right? It's just a pullback, but negative 25% from this recent highs all the way down here, back to 9,000, which means almost every major tech company would have to crash for us to go back into a bear market on the Nasdaq, right? If we rewind to S&P, if this hypothetically, if this was the top, negative 25% is all the way down here. Erase almost all of this year's gains. So something extremely bad has to happen probably for us to crash that much. It could be panic selling, yes, but it probably has to be related to the virus if we're going to crash down again in the economy. So again, we're finding temporary support, right? All these charts look very similar. We're finding temporary support right here. It's just we hit this top zone. Okay, we hit this topping out zone up here, and then we're now back into the bottom zone. So if the uptrend's continuing, then this actually might act as a support bottom area where I underline the U, right? And then if we keep continuing after like a couple months from now, great. But if we have some extreme volatility, if we break down, then it's bad. Okay, but 1-2 red days, it's not a huge problem yet. Because the trend is still up technically on the day. Yeah. So it's just kind of like weekly pullback. All right, next, Russell 2000. Russell 2000 a little bit more different because it's the small business, small cap index, and it had this double top M. So on the Russell 2000 at least, like, this is a little bad, right? Double top. So let's erase that and mark the double top. A little bit sideways double top, but right there. See that? Price try to poke through a second time and failed down. Then we crash back down to this support, 1500, 1464. These are all support levels I'm marking, right? Just visually. And we have a gap here as well, over here in the 1400s range. Okay, but Russell 2000, sometimes I view this as a sentiment indicator. Like before COVID, there's a straight up head and shoulders right here. Very bad pattern on the Russell 2000. So here again, Russell 2000, we have an M. All right, so how do we use the M? Let's see right here. There's a secret of technical analysis right here. You measure it. Well, I like to measure the close to get a conservative estimate. Okay, 2%, and then the full one is like 2 to 3. Okay, from the breakdown spot. 2% is here, 1519. Another 4% would be 2% would be down here, 1489. So this whole range right here is being tested. This whole range right here being tested. But if we look at Russell 2000, it's actually, this is not pure uptrend. Okay, it's consolidating to the side right here. So if you draw trend lines, they were violated. They were broken down. See this? Suspicious, right? When you look at all these other charts, that didn't happen yet. Depending on where you draw it, right? But this one, if you draw the whole thing, it's like, okay, we're going sideways and we broke down bearish. If you try to do this here, you might not get enough touch points. So, just an interesting anecdote right here. Suspicious. What needs to happen is this needs to break up and go like this. Break above the resistance and hold it. That's what needs to happen. All right, so we just need to watch. Basically, I mean, if you're invested, if you're trading, if you're just trying to practice or get education, it's this month is critical for the stock market. The next 3 months, actually, because we got that election coming up in November, presidential election in the U.S. All right, so VIX, the volatility of the S&P 500 index, the volatility. So hit our targets, the bullish targets that I set. Basically, exactly. So how did I know this? Okay, so we use technical analysis. All right, we're looking for support and resistance levels. Right here, like I was saying, there's a gap over here. The gap support, the big yellow box. All right, we're finding support there for a whole entire month. Also, like I was saying, potentially in the past couple of videos, potential upside down head and shoulders. Boom. You can measure it. I mean, we can measure it, but it went way, way above the target. Right? Way above the target. It went 50% above the target to where these previous highs. There's another secret one up here, 38. So in the matter of like 1 to 2 weeks, we went from 20 to almost 40. Incredible volatility. Like 77%, 80%. But this is interesting, right? Even when the VIX, it has this breakout of this upper trend line, the white trend line. Right? This is this could be tightened up a little bit. Like if you view it like this, then it becomes less questionable. Right? Because the price broke out and then had a rally, like I was saying in my previous videos. Right? So we want to watch the S&P 500 more, way more than the VIX. Okay, there's correlation there. So, moving on to gold. Okay, why is gold important? Because it has a relationship to cash and is an asset. It's a commodity, right? So this line is a little messed up over here, but just kind of consolidating sideways. Didn't quite hit our targets yet, but let's leave them there because gold likes to move and then it likes to rest. So the short-term analysis right here is basically flagging. It's a large flag. It's kind of turning into almost a symmetrical triangle now. So that's why we have the 5% targets to the upside, to this yellow circle X, maybe, and to the yellow bottom here. Stuck between these two ranges, right? 2,000 and 1,800. Basically stuck between there, going sideways, consolidating. So let's move on, try to make this a little faster. Spending a lot of time on these. All right, silver USD. Silver USD is just look at the price pattern right here. Okay, there was that triangle pattern. So let me just erase the yellow. Right. What's more important is just the price. I'm on the 1-day chart. Okay, if we have patience and we use our skills, we could discover opportunities in the market. Right, so what's happening? Well, we were in an uptrend on silver, like this whole year almost. Well, starting from April, the recovery up into a consolidation. So let's draw this consolidation right here. Boom, boom, like that. Again, kind of symmetrical triangle action. What does that mean? It's gonna make a move. There's gonna be a breakout at some point. So we'll measure the middle, 14%. Well, let's do a little more conservative one. Let's say 7%. Okay, 7% targets will be 28.52 on silver. Okay, so let me go ahead and erase these targets. We'll set some new targets. Measure it. The price from the breakout spot, 7%. That's like 28.50. Target 1. If we break down out of this, right, somewhere around here, it's like 24.75 around here, right? Boom, boom. Those are the two immediate targets. And then if we go big targets, 14%, 14% would be the $30. Interesting, right? Then 40% down would be 22.77. So these are our four targets. These are our four targets, right? If the price goes down, it's probably targeting somewhere here, like this range. Price goes up, it's targeting somewhere in this range, right? But it's consolidating right now. Not much happening, but it's building like a coiled spring. It's building. DXY, dollar currency index. Okay, so dollar currency index, this is just the index of the US dollar versus about 6 global currencies. And for me, it's more of a sentiment psychological indicator, momentum indicator of the US dollar. So yes, so it has been in a downtrend since May, June, July, August, right? Finding some kind of support here. What does that mean? Is that people are spending their cash and buying stuff. What are they buying? They're buying like stocks. They're buying options. They're trading. They're investing. They're buying merchandise, maybe like retail, technology. They're buying stuff, right? Because right here, when you have a huge spike in the DXY, that means people are getting their cash back. They're selling their stuff to get the cash back. So there is some potential setup, although it's not good to use only 100% charts on this. Okay, it's not good to use 100% charts. Meaning technicals, the dollar is very, very much like fundamental analysis. Okay, so it's news, it's events, it's real humans, it's real people, it's economics. So, but this is a real setup. There's something building here. That's why we got this volatility, right? Up and down, up and down, up and down, right? Might get some selling, possibly, right? I mean, we already got the start of this, right? The S&P, Nasdaq, tech selling off. So where are our targets? These targets still remain. These are really good targets. Still remain. For the DXY, 94, 94.69, 95.70, because these are previous levels of the price. So I'm going to say here is this looks suspicious. Suspicious. Are we going to see some more selling in the stock market? It's possible, but we have to see. For confirmed evidence, we don't need to panic before anything actually happens. But be prepared for either way. Okay, US oil, interesting. Okay, so there is some correlation, right? The relationship between the S&P 500, the Dow Jones, and oil, US oil, right? So it's kind of hard to see. That's why I'm shifting this around. But we were in the uptrend, okay? Higher high, higher low. It's kind of topping out, and then we had this resistance around 31.18. All right, so sometimes I like to use USO also as a psychological momentum and economic indicator, leading indicator. So we broke down, okay? So you could see here, here's an example of a short-term breakdown on the charts, right? Because it's higher, high, low, high, low. These are all going higher just barely. This is a warning sign right here on oil saying they're trying to push it through up and they can't break it. So then lose momentum. They tried one more time, couple more times. Then the bears, the sellers say, nope. No, they're basically gatekeeping this. They're the gatekeepers of this price for now, 31, and say, nope, rejected, boom, boom, down, down, down. These is probably some shorts or something, protecting their profits. They shorted down from here, take their profits, and you know what? We're going to do it again. So we want to watch out for that. Our support levels are in this range, 28.45. Next support, 27.87. Next support, 27.20. So we hit our targets, bearish targets. So I'm going to erase this. Bullish targets are still up here. But again, we want to watch for the trend. It's been in a very, very, very short-term downtrend. Okay? Very, very short-term downtrend. So it's seeking out the bottom. Where is the bottom is the question. Which one of these is going to be the bottom? I doubt we're going to go all the way down here very quickly. It might happen if there's some really bad news with COVID-19 and vaccine, and then which would cause a chain reaction where there's less oil demand. That would happen here. That already happened back here. Huge crash. So it's just a pullback. But on this US oil, again, it's still a giant red candle. What is that? It's a falling knife in the market. It's a falling knife in the market. So we don't catch falling knives in the market. Anyone trying to trade this right now, beware. Falling knife in the market. Just watch out for that. UNG, natural gas. UNG had its reversal signal, upside down head and shoulders with the breakout, okay? Then turned into an uptrend. Boom. Good. Now we're having another top out reversal signal, head and shoulders. Almost. Right, on a candle, it's head and shoulders. But on the line close, not yet. So, I'm not going to get too super excited about that yet, okay? Because we don't want to get fooled. Sometimes we get fooled by the robots, by the bots. Get tricked into thinking it's going to come down when it's not. So, Want to watch out though. These X's and these yellow lines are, this is where the support it could pull back down to. Okay, so immediate support on natural gas is $13.33 and $14, like $13 to $14. Right? Everybody see that? Anybody who's watching this like today or later? It's hard to see, but it's boom, you have a going up, take us a profit. Right? But again, natural gas has been doing well because of the demand for gas this summer. So we just want to watch out for that. If it happens to continue and break bullish and go up, $14.50 and $15, other two targets up here. 1, 2, like that. But again, if the entire market crashes, US oil and natural gas are probably going to pull back. All right, so before we go into global, before we go to crypto, let's do some US stocks right now. Let's do some stocks. All right, so with all that global, the US broad market perspective in our minds, okay, let's switch up to stocks. First one, let's do Apple first because the market cap is bigger. See this chart? It's because of these big tech stocks that we're having such a big pullback down day in the stock market for the past 3 days. But if you look at this, the stock split announcement was here, I believe, on the earnings. I remember that day. Let's turn the earnings calendar on. Right here, before this gap up, July 30th. It happened at like 1 like 15 or 1:30 p.m. was the announcement, I think. Post-market news. Then the next day, gapped open, pre-market, boom, up. Okay. Then this is kind of a hype rally. If you think about it, the angle is sharp. Because if you look at Apple, it's very like, I'm just gonna call it pleasant, right? It's just like rolling up. We're just riding up. Then you get a sharp rally like that. That's when you got to watch out for the market, just visually. Okay. Happened here again. Back in the past on Apple, right? You're going like kind of smooth. You get a sharp up. You're going up. It's still angled higher than before, but then all of a sudden you get this like really sharp one, especially at the end, like super sharp. Right there, right? So just visually, without indicators, just doing it visually is reading the chart like reading society's emotions. Okay, we can't really read their mind, but we can read their emotions. It's printed on the chart, so to speak. The buyers and sellers, the demand and supply, it's printed on this one-day chart, so to speak. All right, so what's happening? Well, Apple's still in the uptrend, but if we kind of zoom out, all right, we're getting the start of monthly consolidation, meaning monthly selling. Weekly, this is, it's just kind of boom right here. But again, like I was saying, I think it was even just last week's video, we get this Elliott wave pattern, 1, 2, 3, 4, 5. Then is it going to turn to ABC down correction? Maybe. The next earnings, when is this? Next earnings on October 29th. That's just 1 month, almost 2 months away, almost less than 2 months, right? So is this going to happen? We're going to ABC correction right into the earnings? Maybe. Or is the B wave going to be the B wave bounce going to be during earnings and maybe we'll crash? Pull back, not crash, but pull back during elections, right? But this was on the charts, right? This is a weekly chart, okay? So if we erase that and now go on the one-day chart and we look at this, it's like, well, okay, well, we're still in the uptrend, although this trend line, if we draw the full trend line, is way down here like this, okay? So Apple has plenty of room to pull back and still be in a longer-term uptrend, like a weekly and monthly, like investing uptrend. But, the previous all-time high of Apple was down here. I mean, it's difficult to, was it 4-to-1 stock split? So it's $320 previously, right? This top, now it's quote-unquote $81. But if you just remember the stock split, it's $320. And then up here, basically $100, right? This used to be $400. And then the top we had right here, way up here, right? Now we're at 120. So where's the support? Well, there's a gap support. Remember gap? So boom, draw that in there to the next earnings. Draw that in there. Right, so let's just measure this right here. The close to the close, we'll do wick to wick. Boom, right here. Basically 54% if we do close to close. 43%. It's basically 44%, so 22%, that would be somewhere in the middle. Dow Jones theory, 113.52 price. Would be, and it already hit that. Boom, you see that? Candle, boom, boom. Sellers try to do this, and buyers, the bulls say nope. That's where they're going to pick up some share, and boom. I'm talking about traders of bots, robots, day traders, swing traders. People just looking to make money fast. Traders, boom, they're doing this. Buying at that support level. So if that support fails, there's the bottom of this candle, 110.70. Then I would say the major one is probably the top 105 and then the gap support. So right here is an interesting like inflection cross point. This range, 105 to 100, I'm just going to circle this X, is interesting because there's that old yellow trend line and this support. So it's kind of like X marks the spot zone where there's probably going to be trading action. That's not the good spot to buy, but it might be, but I'm saying it's an interesting X marks the spot cross point for Apple, right? Because if Apple, think about it, from the bottom of the COVID-19 crash to the top here, 161%, right? So 80% would be half of this move. If Apple comes back to like 95, 100, or even down to like 80, 90, 100, that's probably better spots to, pick up more Apple, right? Because that is basically from recent highs, that's like 30% off, 25% off to 30% off, right? I mean, 50% off would be incredible, but it's probably not going to happen until the next crash, like $63 Apple. That's a bargain. All right, so interesting larger term support over here. Larger term support, right? So it's in a steep uptrend. All right. Now, if the bulls really want to save Apple, they got to do this: higher high and higher low. Got to keep, and the company needs to have good fundamentals and earnings. So it might happen maybe with the next iPhone, with the next Apple service sales. Excuse me. But that's, a couple quarters away, right? Over here. 1 or 2 quarters away. So we want to see the high, low, high, low, high, low, high, low. Is it going to be here or is it going to be here? Either way, this still needs to break 140, 150 to even continue this uptrend. Like we need to see this action over here. So I'll leave that. But immediate resistance is 128.18. The ceiling, 138.47, like that. Immediate support, 113, 108, like that. So we got 2 long-term targets on Apple. Okay, next Tesla, the big news on Tesla. Let's just erase everything and look at Tesla as well. So Tesla, Tesla is like really popular in America, USA, at least right now. I think I saw a research report that said basically 2/3 of the USA is looking at Tesla for stocks, investing and trading. 66% of the US traders, right? I'm talking about looking at this chart. So that's very significant when everybody's trying to buy the same thing, right? There's going to be action, volatility. There's going to be action. So right here, these 2 lines. Right, maybe we could draw a third one. I'm not going to draw a third one though. So these 2 lines, these 2 trend lines, we're still in the uptrend, right? But if we zoom out for a second, interesting, right? You see this year is when we got the super Tesla excitement, right? It was happening last year, and then we had the big sell-off, the big pullback. This is big options trading. The beginning of this year, COVID-19 pullback. Then we get some big buyers on Tesla. So that's partly why we're pulling back. Also, again, there's this 5-wave Elliott wave pattern. 2, 3, 4, 5. So is the ABC correction? It's possible. Yes, we could do A, B, bounce up and come back down to C into the next earnings. Possible That's one scenario if the market and everybody decides to sell and everyone gets like scared. Okay. If that doesn't happen, we could still pull back. It's on 1 week chart. Every candle's 1 week. Still pull back all the way down here like 350 and even continue the next round of hype. Okay, so Tesla's still in its uptrend, but it's still in a little bit of an overextended area, right? So I'm going to draw the support levels now. Support level 371.73. Okay, why is that one important? That's the support price, the floor here, and it used to be the previous ceiling. At least 2 major points ranges. Right there. Okay, another support right here, 338.90. Support here, 274.52. Resistance right above, 433.94, 463.83, 502.92 are the prices. So it's stuck between, it's in a range right now of 80%. Where did it pull back down to? Almost 40%. So that Dow Jones theory, that 50% mark of the range, right? It's 20% cheaper. Some traders are going to say, hey, they're going to do that. So this is an interesting pattern, right? Again, this week is going to be critical. Is this just a temporary support, or is this the bottom and we're going to keep going up? So we have to really watch what the rest of the market's going to do. Not what I'm going to do, but what is the rest of the market going to do? But technically, these are some reasons why. Okay, you could just see it on the price. If you look at a 1 month chart, like what are people doing with Tesla monthly? Everybody was buying for 5 months straight. And then this last month August is when the huge excitement and the buying for Tesla exploded. Right here. So you could even see like a monthly Elliott wave. 1, 2, 3, 4, 5. Although this might not be super accurate because the 5 is too long, but the general feeling, the general psychology is there. The weekly one makes more sense. So there's that. Let me bring up some other tools. Let's see. What do we got here? Let's bring up this one. The basic technical charts package that like probably everybody is going to, most traders are using, right? They're using these tools. So get Tesla on the daily. If I turn everything off, right? Okay, so yes, it's been in the uptrend since November 2019, right? See these lines? The moving averages, right? Boom. Finding support here, right? If we have a crash, crashes like to test down here, the red, the 200-day moving average, back down to $200. If that's going to be the bottom, right? But if it's a temporary bottom, right, we're also using shorter-term moving averages, right? We had to cross up on April 20th. Boom. Finding support, bounce up, then consolidate down, finding support. So we hit this purple line, which is the 26-day moving average of the price. So that's our temporary support right there, if you want to use moving averages as indicators, right? The next support would be here, this yellow one, which also happens to be the price inflection point on this left side. All these things are matching up now. So let me bring this trend line a little closer. Right, it needs to be here. So right there, this is another interesting X marks the spot. That 50-day yellow moving average and this trend line are crossing right there. Exactly. Very, very suspicious. Interesting by price. I think this thing got messed up a little bit. Right here. Yeah. So we actually don't need the bottom. We just use one. So right there. Interesting price point around like 330, 350. Interesting. Also, if we look at these other tools here, like RSI, we got double top right here, loss of momentum on technical charts, heading into this last wave of August, right? There's that indicator, right? If you want to use other indicators like pivot points, boom. Now we're under the pivot point. Suspicious. We broke above the white pivot point, hitting these orange support price levels. Boom. Hit R3, resistance 3. Couldn't handle it. Broke down. Buyers trying to, you could just see it. It's like the story of the trading is on the chart. It's like uptrending. Boom. Got rejected. Big battle between red and green. Green trying to create the support here. Sellers say no. Trying to sell it down. Then bulls say push back and buy in the market and try to push it, but it's under this pivot point. Under the pivot point, it's a reverse. I mean, pivot point is supposed to be, basically important price levels, mathematically calculated, automatically calculated, right? So want to watch out for that. All right, so long story short, for Tesla, there were warning signs. If we're using technical analysis. But even if somebody's not using technical analysis and charts, you just felt it in the market for August and September. You just felt it. If somebody's like hip to the culture, if somebody's hip to what's going on, what's popular, what's trending, Tesla. It's Tesla. In America and worldwide too. Okay? But again, it depends on the investor and the trader's time horizon, meaning how long, what's their holding period? If the holding period is 10 years, then maybe this is not a huge, big problem. Because it reminded me of what happened this week of what Warren Buffett said. Warren Buffett, let me type it. I got to type it because such a good quote. You know what? Let me find the quote online. I'll just bring the window in right here. Warren Buffett. I mean, it's like the ultimate. It's the ultimate. Let me bring it on. Right here. Warren Buffett. One of the greatest investors of all time. Be fearful. Be afraid when others are greedy. And be greedy when others are fearful, when they're afraid. Greedy, that to me, the synonym, it's also similar to FOMO, excitement, hype. All those are related. Fearful can be afraid, sad, demoralized, gave up, right? So this is not 100% perfect advice in terms of market timing, but as a super long-term, he's a buy and hold forever investor. This is so true, so true. When there's maximum fear in the market, that's when we have to buy. Literally, that's like one of the hallmarks of investing, the secret to investing right here. He told us. It's not, I don't have to hide anything. He told us. Be fearful when others are greedy. Be greedy when others are fearful. The greatest investor of all time told us the secret. Right? He doesn't have to hide anything. He just told us the secret. So how do you apply that? How do you apply it? Well, right here. When were people the most afraid this year? One word, virus. When did that happen? February 20th to March 20th. Basically March 20th, on the index, March 23rd was the bottom, but basically mid-March was the bottom. That's when people are maximum afraid. Markets crashing, downtrend, people are panicking. Remember that in the USA? Like toilet paper selling out, people stocking up on toilet paper and frozen food because everybody was, rightfully so, scared about panicking about the COVID-19 crash. And they were right, but from a stock market point of view, that was the time to buy as an investor. Because you're getting Tesla 60% off from the recent high. That's how I knew, just as an individual analyst, technical analyst, is yes, we had the recovery. So once we had the recovery, right, and we broke all-time highs on Tesla in June, it's like, all right, now anything's possible. It's blue sky breakout. Anything's possible. So we had another rally, right? Consolidation down, and then a big sharp rally. All right. Then when you have this pattern, right, and then you look at another indicator. Even with this indicator, or without it, you could just feel it in the market, right? Self-fulfilling prophecy. So, right here, we're finding temporary support on Tesla, $376 to $400. $400. right here. So if it breaks down bearish and the selling continues, then I'm looking at like 330, 340, 350. But if this is the bottom and we just keep going up, great. Great for Tesla bulls, right? $500 needs to be broken. Then 550. There's two targets. But again, we look at trend, not just one candle in isolation. Look at the trend. Look at at least like a 1 year history on this thing, on Tesla. So September 2020, go back to September 2019. Like, where did we come from? Where do we come from? All the way back here. $42. 1 year ago, well, this is post-stock split pricing, but 1 year ago, it was $43. Literally 1 year ago, $43 Tesla. $44 Tesla, way back here. Fast forward 1 year, it's $400 Tesla. Right? So yes, the company is good, but again, you're getting basically a 10x, 1,000% increase, almost, right? Maybe like 900%, but basically right here, big FOMO, and then you get a big crash. So again, Warren Buffett's investment rule is a secret. That's probably the moral of that. That's the secret lesson of this live stream to anybody who's watching this. It's a secret by Warren Buffett right there. He told us. All right, so let's speed the things up. It's been like an hour. So all right, so we'll just see we'll look at the interesting correlations right here with Amazon. All right, we'll just take a look. I'm not going to do a full chart on Amazon. But see right here, boom, 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 finding support. Hammer candle, finding temporary support right here at Amazon. So looking at Google, not quite exactly the same thing, but similar psychology. This is more of a doji. This is more indecision candle, right? Falling back into the pattern right there. Amazon falling down below its this trend line over here, or just inside. Let me do another one. This one's not as accurate. This makes more sense. So yeah, still falling below the trend line. See that? Close below. Interesting. Google just falling back into the triangle support. Okay, Microsoft falling down into the support level. And I literally marked this. That, wait a second, Microsoft is poking out above this trend line. That's suspicious. That's not good either as an analyst. Right? As a trader. Then it's breaking back down. Boom, we're back down here. So if you think about it, the past like 3 days is like a day trader's dream. Short seller, day trader, they dream about these kind of days. So when it happens, this kind of mini crash, flash crash, I'm going to call it on stocks, tech stocks, day traders love that so much. They love it. But you know, in the stock market, it's a zero-sum game. For where there's a winner, there's a loser in trading. So we have to remember that. We have to be careful when this kind of stuff happens. I feel bad. You know, if somebody bought Microsoft up here at 230, they got crushed. If they sold, that is. All right, Netflix, similar. See this bottom trend line? Boom, down, 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 support. Hit our first target, second target, push back up to the first target. See that? Netflix, a little, like I was saying last week, a little bit more difficult because Netflix is like mixed. It's questionable right now in terms of popularity. All right, so Facebook, boom, look at this. Broke out of this triangle, right? Double topped up here, not testing this triangle. This could be an interesting setup. Example, okay, Facebook is still a large tech company, okay? We hit our target up here. This is the double top resistance, like I'm saying last time, resistance. Finding support in this triangle right here. Just like, what was it? Was it Google? Just like Google, Facebook has room to break down into here, 265 range, right? It could go, because double top, straight into there. Possible. If not, you can find support here. It's testing this the top of this triangle right here, and can break up. Break out. Test this again. So interesting. Facebook would be an interesting example. It's plus or minus like 7% on Facebook right now. Interesting. Interesting. So we have to see what happens with Facebook. Just visually look at other companies. We'll go much faster. Berkshire Hathaway, not much of a pullback. Visa, yes, pullback. Johnson & Johnson, some pullback. Walmart, pullback. Procter & Gamble, doji, meaning indecision, just kind of up and down in one day. MasterCard, just like Visa, some pullback. These are the larger cap size companies. JP Morgan, Chase. Actually, a little strangely, a bit of a rally, sell-off rally. So we're just looking at the top largest right now. The big news like this week was like Apple, Tesla. We can look at other things too, but I think those are the two big stories and examples, right, of kind of overextended rallies and how they get dangerous. So again, for investing, technical analysis, the stock charts, it does help with the timing. But it's possible, I believe, that somebody can do this without charts. Just look at price. If they're maybe really, really good at risk management, company fundamental analysis, and analyzing the company and the products and the management, and just if somebody's really good at like reading society and trends and navigating all of what I said, it's possible somebody could do it without charts. But charts for me is just like, it's just so much easier. You could see it on the price chart with your own eyes. That's the confirmed trading, right? You see this emotion on the chart on Apple, boom, boom. The stock split hype, especially right at the end right there. Tesla split hype, right? So we got to watch out for that in the markets. Let's switch it up. Let's go to crypto first, and then we'll end with global. And if anybody has any question, feel free to ask. Let's go here. Where are we going? Let's go to crypto. This is crypto. Try to do this faster because nobody really wants to watch a 2-hour live stream. So I'm trying to do these faster over time. But I need to explain this. Okay, so Bitcoin, BTC, US dollar, 1-day chart, Bitfinex exchange, for example. All right, what I was saying last time, if you rewind the tape and look back last time, I was calling this potential head and shoulders pattern, which is typically a bearish pattern, right? Right here, boom, boom, boom. Right where that X circle was, that's the neckline. That's why I marked that spot. If that gets broken, that would be bad for Bitcoin, like I was saying. So do the official measurement. All right, 10%. So we break down from here, 10%, right? So the analysts, the traders, they're using that exactly. So that's the first target. The next target, if we break down another 10%, would be $9,000 price target on Bitcoin. Right here. So first price target here. Second price target here. These two yellow circles, right? So it happened. Again, we have this resistance up top. I was saying it last time. $12,500, $12,000 Bitcoin got rejected 1, 2, 3, 4 times. When I saw this in the market, I remember this past week, last week, I'm like, oh, in my mind, this is during the week. I'm like thinking, oh, this is setting for the head and shoulders. And if we get this Tesla Apple bear breakdown, boom, then we get this. Of course, this is going to happen. Let's go. Of course, it's going to happen on crypto. Right? So again, we want to watch out for the FOMO. Watch out for the FOMO. We got a short-term exponential moving average cross down, okay, which completes this move, right, for the bots, right, the robots and the day traders. That's done. That's done now. Now we're moving on to the next thing. So if we're looking at that cycle is done. So now we're below this pivot point, this support 1 here. I'm just showing you various example tools that I think a lot of traders use, right? Especially moving average support. We're basically testing the orange. This is a 100-day EMA moving average, right? Support. Are we going to break down to this red 9,500? Possible. We already hit the first target. Could break down here and break down here. So again, how far is the bearish selling pressure? How far is the fear going to control the market, right? Again, we want to watch out for FOMO. We want to watch out for hype. We want to watch out for just getting like too excited. Like when people kind of start getting dollar signs in their eyes and get really excited, you want to watch out for that in the market. Just like Warren Buffett said. Let's just show it again because it applies for Bitcoin. Let's do it on the Bitcoin chart. Let me full screen this. Right here. On the Bitcoin chart. Be fearful, afraid when others are greedy, aka this. When you get a rally, huge rally, that's not a huge one, it was like 20-25%. And be greedy when others are fearful. So now what's the next step? What's the next step here? What's the next plan? I keep telling people this like every live stream, hinting, this is the education part. If there's ever another large, super huge crash on Bitcoin, that will be the time to load up on Bitcoin as a bull for it, just educational example. Okay, it's not financial advice, it's educational. Right? We get a huge crash like this. Huge. Because of the virus. Negative 60% off Bitcoin. You go to the store and you see Bitcoin for 50% off and still Bitcoin. It's like, oh yeah, you know people are going to buy that. Right? The same psychology applies. Think of this. There's a flash crash Black Friday sale on Bitcoin, so to speak, the COVID-19. Right here. Now, where did we come from? I'm going to say the recent price high was 12,000. Okay, 12,500 too. So 12,000, where did we come down? We were almost negative 17% off, right? And it's still bearish pressure. We got to watch out for crypto because it's a 24-hour trading device, market, exchange, right? The market went down almost 20% in a month. Okay, I'm not surprised by crypto. I've been trading this market and studying this market for many years now. And I'm totally not surprised. It's just like totally normal. Business as usual for crypto bears. Because remember, in trading, there are the green buyers, the bulls, and then there are the red sellers, the bears. In between that, there's options trading and there's futures trading. So many people have their hands on Bitcoin. But who are the big players in the game? The whales, the rich, the powerful traders. I'm talking the billion dollar account, the hedge funds that can move $100 million in like a week or a month, right? So again, this could be, if you think of it that way, who are the opponents to retail? Hedge funds, institutions in the market, so to speak, right? Not personally, but in business. Competition, this is a total distribution pattern. Up here, you want to use some Wyckoff method, right? This could be a little bit of accumulation. This could be distribution up here. Or this could be accumulation, distribution, accumulation, distribution. Another cycle, right? So now what I'm looking for is, and this could be a Bart pattern, the top of Bart Simpson's head. That's like a crypto pattern, right? It's a Bart pattern. But it's also head and shoulders, right? So again, we broke down below this, right? Finding our support at 10,000. So 10,000 is our psychological. You see this right here? Even just look at the price. It's just flickering up and down between 10,500 and 10,000. So that's the range we're going to put this at. I'm just going to draw this box. 10,000, 10,500. So it's looking like it's going to turn into a potential bear flag. What does that mean? Like this. We can consolidate in here, or it's going to turn into a bear flag pennant or a pennant. Right? So watch out for that this coming week, the next 2 weeks. It'll be interesting to see. It'll be interesting to see if this thing breaks down like that, like real fast. Like, very interesting. Right? Might be a buying opportunity right there. But again, I try to focus more on longer term investing and such. And longer term trading. So I'm thinking more about the day chart, right? There are day traders, like if they go to 15-minute or 1 hour or something, yeah, there's some trading opportunities there in the 4 hour as well. But we might bounce. Again, we want to see after this weekend, maybe going into this weekend, but I just getting the sense that people are taking a break right now. Okay, Ethereum right here, boom, Ethereum. Like I was saying, this is almost a head and shoulders, but again, you get a little bit of FOMO rally right here, then the bears, and people up in the money from down here and saying, you know what, I'm done, and they're selling. Boom, 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 big power selling. So you see our targets, our bearish targets, our bullish targets to the upside, boom, hit 500 psychological zone. 446, boom, rejected, down, 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 down. To where? Our support levels that we marked, the XX. How did I know that was going to happen? Well, there's some previous price action right here. And this, right? So there are zones. There are zones. It's never perfect. Did I know it was going to happen on this day exactly? No. But the analysis of this is where it could go was correct. 30% off your Ethereum, or everybody's Ethereum in the market, right? So we have to remember, where did we come from? Where did we come from in this market? Interesting. High, low, high, low, high. Higher, high. So if we do trend theory, it's a little bit more extended, but higher, higher, high, higher, low, higher, high, higher, low, higher, high, higher, low, higher, high. This was a higher low, higher high, and then a lower high. So, suspicious. Ethereum needs to find a bottom. I'm not seeing a super clear signal. It's still questionable, right? Because again, this is why we don't want to get too cocky on Tesla and Apple. Support is this happened. You still get the hammer candle support, but then you broke down. So it's possible, right? Crypto is a perfect example, right? We always want to watch out for this thing. This stuff, when you get a FOMO rally like that, that's why I'm always doing bearish targets. All right, Ripple, really messy, so I'll just erase this now. Ripple, all right, so Ripple right here, lower support, 21 cents. Immediate support, 23 cents. Resistance, 28 cents. Resistance, 30 cents. Simple, keep it simple, right? This trend line over here, broken. See, now resistance. So it's been downtrending. A lot of altcoins, alternative coins, you'll see are downtrending, lost momentum, and they broke down their trend lines. So that's another indicator for me. Psychological indicator. When all the altcoins were downtrending, I'm like, there's some loss of momentum and confidence in the market. Bitcoin Cash, same thing. Look at this big breakdown out of this channel, and I'm going to erase this now. Breakdown. See this downtrending? This is a perfect example of downstairs action happening. Downstairs, then boom, big lower low. Big lower low. Crash. This is bots. This is short sellers. This is futures. Right there. Right? Then finding a bottom. So right here, I'm going to forecast some kind of probably like this. Right? Or this. So the immediate support and resistance, boom, boom, right there. 230, 235, and 212. Right, so watch out for this right here. But Bitcoin Cash fell down to its big support down here in the $200 range. You see this? Let's put a gold box. There's the big support right there. If Bitcoin Cash loses 200 and goes down, then it's very, very significant. But this is clear. Anyone sensitive to charts can interpret it. When we start downtrending, right, you have time to get out, to take your gains as a trader. If somebody bought here, then we're doing this. You see this triple top action up here? It's like, okay, we get out of the market. Before this crash happens, then you're back to zero on the trade. So crypto's like that. Okay, Cardano. Again, look at Cardano finding resistance here and then starting to downtrend because losing. It's related to Bitcoin. It's related to stocks as well. But this is started happening a little bit faster. Head and shoulders. Boom, boom, boom. Neckline. All right. My previous one, it just broke down through support, but you can actually draw it here if you really want to see. 25% from the neckline, boom, 25% down. Exactly. Another 25% down for target 2 would be this general area, like upper 6-7 cents, somewhere right here. All right, so want to watch out for that. Target 1 has been hit. We're at this resistance level. It's just going back downstairs now. Right? We just wait another week or two to see what's the market reaction going to be. Where is it going to find a bottom? Because this does not look like a bottom yet. On a day chart. Litecoin, boom, hit our support levels. We'll do this again. Head and shoulders, right here. With the neckline, measure it. 23% down, 23, almost 23%. was 21%, but basically target hit. It's close enough. So let's do 21% more down. $36 Litecoin right there. There's also an intermediate support right in the middle, right there. So resistance above 54 and 52. So stuck. Market is basically saying, at least for today, bear break. The bears are in control for today at least. Downtrend. Lower low, lower high, lower low. As this holds, I'm looking for some kind of bounce, right? Or consolidation. That applies to all crypto. Okay, Binance coin. Binance coin. Boom, broke down the support. You see that big one right here, 21. All right, so here's another example of uptrend. Higher high, higher low, higher high, higher low, higher high. But then this is not higher low, it's lower low. So now we lost the momentum on Binance coin. Also potential head and shoulders, or just a resistance break like I drew. Like this. This is a Morningstar pattern, right? So basically it's tested 1, 2, 3 times. Third time couldn't do it. Third time's a charm. Bad luck meaning down. Broke down here. Bitcoin down. Everything down. Boom, right here. So finding support at $18, 19 between 18 and 19, and there's one at 16 or 17 right here. So let's do. It's basically every whole number dollar. It looks like, yeah, for Binance coin, every $1. So that works up or down. But basically right now is we have the pullback down, lower low. We try to make a lower high. So I'm questioning where's the lower low? Where's the lower low close going to be this weekend? Then where's the next lower high? Like start thinking downstairs. Boom, up, down, up, like that. Generally, if it's going to be safe, normal trading. So I want to watch out for that. I wouldn't be surprised if this eventually bounces back to like 20, just to test 20 eventually, maybe. Right? It's either going to 18 or it's going to 20. Right? Yes, you could look really intraday for the patterns, right? Like 15 minute, 1 hour. So 1 hour's downtrend. Also confirmed by moving averages. See that? Confirmed. But for me, if you look at day, is like, where is the big support going to be? It's not here yet. It's in progress. EOS, head and shoulders. A lot of head and shoulders in the crypto market. Boom, like that. Or boom, like that. See? Measure it. We hit our target of almost $4. Remember that? I kept calling for almost $4. EOS, 25%. Didn't quite get there. So let's use a more conservative target. 17%. Yep. So 17%, boom, another 17% down would be $2.15. Crypto markets can move fast. They can crash fast. They could rally fast. They could crash fast. So we're testing this neckline again. So if the resistance is above 313, 345, 382, like that. So right now we're in the downtrend, lower low, lower high, lower low, lower high, lower low. Right? Before it was questionable, is this going to be a lower high, but it bounced and made a lower low. So now it's confirmed downtrend. If you look at this. Lower low, lower high, lower low. So want to watch out. Where's the lower low close going to be? It's not confirmed yet. Is it consolidating? Maybe. Stuck between here and here. Stuck between 315 and 278. Want to watch out for that. Link right here. When I saw this earlier this week, I was like, oh, this is not good for Link. What do I mean? Okay, it came down. All right, that's fine. Still may look, higher or low, but it started consolidating. Did this shooting star fail and started losing momentum? I'm like, oh, it's bad for Link. This is going downtrend. All right, so support right here. Made a support at 940. Another support at 7. Another big support at 650. Another support at 5. Just don't be surprised that these numbers, they might seem too small, but it's crypto. When crypto crashes, crypto really crashes. So resistance on top, $13, $16, $19 resistance on top. Just now we want to watch for the trend. If you draw the trend line, it was violated. This one was violated. See that? So where's the X marks the spot zone? $8. $8. Bulls trying. There's probably some short-term momentum bounce play. Yeah, right here. Yeah, definitely short-term momentum bounce plays in progress over this weekend. It's robots and day traders, right? But I'm talking about big moves on the day chart. I'm not seeing the big support yet. There's short-term support, but not the big-term support yet on the day. Xlm Stellar, look at this, hitting our downside targets. I was calling this last time, potential head and shoulders, starting to downtrend. If we lose this trend line, like I was saying last time, then we see the bear break. Boom, 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 down, down, down. Still crashing down. So let's see what happens. Again, this is like weekly. If you look at this weekly, see this rounding top pattern, head and shoulders pattern. And I couldn't call it last time because the right shoulder wasn't created yet. But once it does this and you lose the neckline, you see this? There's a classic technical analysis in play on crypto. 16% down. Ooh, we hit our target. Oh, it's looking to go for target number 2. 16% down is 8 cents. Target number 2. 60% down would be like 7 cent target. All right, we got 7 cents. We got 6 cents as these targets. All right. So XLM resistance above is 9 cents, 10 cents, 11 cents. All right, I want to watch out for this. But basically, XLM giving up all of its gains since July. Literally. 2 months later, back to where the trade started. So traders in crypto need to take their profits somehow, but that's up to you to make that decision. All right, Ocean. Somebody requested Ocean last time. Let's erase everything. Look at Ocean again. What I was warning about is watch out for the support and resistance breakdown plays. Right? Look at all these. Okay. Also, the trend line. If you draw the trend line, is like it's getting suspicious. This super steep trend line was broken over here, right? But again, it consolidated the price. When I saw a consolidation happening on Ocean, I'm like, this is not good. It could break out. It did break out, but then you have a Morningstar candle pattern right here. Triple Morningstar candle pattern, which is bearish breakdown. You lost this support level, lost the support level. Ocean, remember, it's just an altcoin. It's just an altcoin. You had a huge rally on Ocean, 600%, right? Now it's down about 50% from the close. So we're hitting this support area around here. It lost this. There's resistance at 3767. There's resistance at 4318 and 5000. All right. So with all these altcoins, right, you could see altcoins, the small ones, the traders know, they do their TA, their technical analysis, and they're saying, okay, the momentum's getting lost. I'm going to get out of this market. Okay. So Bitcoin, it's all on Bitcoin. It's because of Bitcoin and because of the stock market and because of tech crash that Bitcoin market crashed. It's related. All right. So you know what? Let's just power through. Let's do the global stocks. I might go really, really fast on these global stocks, but let's start with Shanghai Composite. Okay, SH Comp. Look, this right here, this triangle. Okay, it's still in the triangle, right? There was an ascending triangle pattern, but it's starting to break down right now. Why? Probably because of Asian news. A lot of events happening in Asia, right? South Korea, Japan, Southeast Asia, Hong Kong, China, right? All they have their own problems right now in their economy in short term. So right here, losing a little bit of this momentum, and the U.S. stock market crash. It's all related. Pullbacks, right? So again, these targets still hold. This support number 1 and support number 2 for Shanghai Composite. HSI, Hong Kong Hang Seng Index right here is starting to downtrend, then rally, hit that, starting to go down to the support level right down here again. Right? 24,000. So 24,400 to 24,000. Right? Boom, boom, boom. So again, if you look longer term, lower low, lower high, is this support level going to hold in the 24,000 range? Is it going to hold, right? So support right here around this X, right? Support 1, support 2. Resistance 1, resistance 2. Very simple. Okay, let's keep it simple. All right, Japan. So Japan, this old sideways kind of wedge pattern breakout, but then right here this day is the prime minister resigned right here on this day, right? So I'll just leave that there for as a marker. We had another rally, but then gap down. So right now, Japan kind of still in a short-term uptrend, strangely, right? Short-term uptrend. But again, loss, it's being affected by the Western market. All right, so those targets remain. KOSPI, all right, KOSPI South Korea Index is they're having their own, COVID-19 lockdown issue and the typhoon problems, right? Economies, basically, they're locked down. So they're much slower economic activity right now, which is why you see this just kind of come back down to the bottom of this channel. So this trend line holding as support, right? So support 1 would be 2316, support 2 would be 2269, right here. And then the resistance above 2396, and there's still the targets are holding. So this is still holding as support, right? Now the question is, after this lockdown, after the recovery, economic recovery continues, maybe in like the next quarter, we might see a rally. But again, the US elections is somewhere around here. Somewhere around here, right? So there's plenty of time. So basically in quarter 3 earnings, we might see a rally. Possible. Australia, XJO, look right here. There was a test of the bottom, broken down, then rally, tested, and then back down. So this is very strong, significant support down here at 5,900. 5,900 right there, Australia. So our target has been hit, bearish target. Let's mark that first support zone right here. Second support somewhere around in the 5,800 range. Right, it's probably related to Asia and the US market. So watch out for that. Resistance still back up here at 6155. Nifty 50, okay, starting to break down out of its triangle. Let's just draw that really quick. Right here. See this? See this? Just starting to break out of its triangle. Break down. Break down out of its triangle. Like that. See that? Just starting to fold over. So we want to watch out for Nifty 50 because Nifty 50 has India Index has some excitement going on there. So watch out for support. 11,100, 10,883, 10,605, 10,318. These are all support levels we could crash down to if this gets real serious, which it might. But again, resistance on top, 11,598, 11,800, 12,000. These are resistances. So it just depends on what happens with the economic activity there. But there's a little bit of momentum building back into the neutral zone. Nifty 50, but again, it's mixed, right? You could come down all the way back here and still be fine in the economy, in the stock market. Next, Euronext, just very quickly, just playing this triangle. So it's stuck between 970 and 1,000, right? So I'm expecting this, unless it crashes down like that, to go downtrend. But if Euronext wants to stay strong, then you stay in this triangle right here. The UKX 100 already in a downtrend, unfortunately, since June, July. Right, so we're hitting our downside target of this bottom wedge. Now it remains to be seen. Is this going to hold? Is this going to hold? And are we going to bounce? If not, it's going to break down, and we're going to hit these next support levels down here. 5643, 5569, 5476. Right. So UK 100 index kind of in a bit of a questionable stock position right here, right? It's been downtrending, so just see what happens with that. SMI, Swiss Market Index, right here, consolidating, basically, right here, had to try to break out, fail, try to break out again, but failed. Okay, so they closed one day before us, so I'm expecting to see some kind of market reaction in Europe this coming business week. So right now, so immediate support at 10,038, immediate resistance, 10,377 above. Okay, CAC 40 index, the Paris index, again, stuck in this triangle. These resistance and support levels still holding. There's a new one up here, 49.14. But basically stuck in the triangle. We'll want to see, is it going to break out of the triangle or is it going to break down the triangle? That remains to be seen. DAX, Germany, right? This upper trend line, short-term trend line still holding. Right, but let's draw a new one. It's a little bit messy. So that one was drawn because if you draw this one, it's, doesn't capture all recent price action. So what I like to do, maybe go backwards and do this one. So right now, Germany index, more in this pattern. So all Germany index has to do is just try to hold the support up here to stay in this triangle. Right, support 1, 2, 3. Simple. Resistance 1, 2, 3 above. Like that. So still in a short-term uptrend on DAX. We want to keep seeing, is this the lower high? And then we want to see it go up. If not, when you look at this lower low, lower high, lower low breakdown, right? You want to just watch out for that. TSX, all right, significant move on the Toronto Stock Exchange related to America. US Stock Exchange is we tested this resistance and then had the bear breakdown. Loss of momentum. All right, so lower low, lower high, lower low. So now we need to see, is this going to hold on the Canadian Stock Exchange, Toronto Stock Exchange? This support right here, 16,095. If it doesn't, right, expect to find a lower low. But if this holds, this support holds in this range, I'm looking for a bounce to 16,314 up here. Maybe up here, right? You get the downstairs bounce. It's going to bounce at some point, just a question of where. All right. So that was live stream number 9. If anyone has a question for next week's analysis for stock charts, crypto charts, technical analysis, or education, please leave a question in the comment box right now or in the comments below after this video is finished. Thank you so much for watching. Please remember to click subscribe and hit that like button if you like this video. Turn on notifications if you like for new video releases. Just letting you know, I have a donation link available at Patreon or PayPal below. Donations are always appreciated to keep this channel going and for me to keep providing quality stock charts and technical analysis education. Thank you so much for watching. I hope you have a great week and weekend. And please remember, these videos and charts are for educational purposes only. This is not financial advice. See you next week. Thank you. Bye-bye.